guys, and glad to have you on board again today. It is kind of a bloodbath into the crypto sector as Bitcoin decided to inch one step further to the downside, which is what we've stated multiple times, the very likeliest outcome. So it is definitely no surprise for smart money managers to see prices pressured to the downside, because most importantly that's going to give us more opportunity for those who were patient enough, of course, and those who were smart enough to lock on some profits. So of course, took some gains means we look for reinvestments as long as the trend isn't over, and we still made it very clear it isn't. At least no one knows the future, but the probabilities for this trend to go from bullish to bearish are fairly low. So reinvesting the previous gains is part of the plan. That means we need to see a range building itself. That's exactly what we're doing now, and we are looking for second range boundary tradable areas. Which also means that this is not an area for beginners to deal with. It's more likely an area for experienced speculators. Otherwise, others just have to patiently wait for the range to build itself. Not because you are not good enough, it's pure and simply because it's too dangerous for you, and the natural biases you have as beginners or intermediate level traders will definitely impact the way you will handle the money management, which will not be the case for some more experienced traders out there. So lots of tricky stuff, not to mention that anyway, managing these second range boundary entries are not easy things to do. Technically speaking, they require quite a bit of knowledge because the pattern itself has multiple variants. So anyway, we're going to deal with this behind closed doors with experienced traders or in the live rooms, but still I don't want you guys to do this unless you are in a specific case, which is those of you guys who had money available for cryptocurrencies but had absolutely none of them. Basically, you were standing still, patiently waiting for an opportunity to jump on board the trend, but you weren't in already. Okay, so if you already have a crypto portfolio, well, either you are experienced enough trying to catch a second range boundary, and I'll explain the basics about it, or you just patiently settle and wait for a third range boundary, and then we'll assess what the nature of this range could be. How do we get to deal with it? Do we trend follow? Do we buy for a pullback? And so on. All of those things are going to require patience. So please just be patient. Others, like I said, second range boundary means anyway, we're not trying to catch the lowest price. It's not nearly going to be possible. We will highlight the technical areas that are going to be likely to be the candidates, and we might have one in the nearby area, because the minimum price for me was to wait for 47K. We're getting right there, and looking at the signals, we can see that the bears are profit taking, which is of course totally normal. We are in a pullback structure, so remember that pullback follows the divergence pattern, which means everyone was way too bullish, and now we've broken the support. Which also means, just like in a divergence, you don't buy the resistance breakout. In a pullback, you certainly don't sell the supports. But you must be able to figure out that bears will very likely take their profits on the supports or slightly below. Just like if you were bullish, you had to secure the gain below the resistance, pretty much in here, and take the fucking gains when you were breaking it. So the levels we break generally don't last long in a pullback. So this is definitely an area of interest. We're dealing with the trend channel. The bears are getting out, but that doesn't mean the bulls are getting in. That is all the complexity of this nearby area. For experienced traders, we're having to deal with bears getting out. But like we stated, there are probably very few bears jumping in as a counter-trendy opportunity because the trend is solidly installed, so no one was really going bearish in here. Those who did might be profit-taking at the moment, and that makes a freaking good sense. But the thing is also that they are locking on the gains to the downside. Where are the bulls asking for prices is what you need to worry about, because I don't really think the bulls are asking for these prices now. I think the bulls might be eventually waiting for much lower prices, pretty much 43K and the next available supportive areas where we got moving averages and lots of technical clusters. So there is pretty much like a nonsense area in here that lasts for approximately $3,000 to $4,000, in which we absolutely don't give a fuck and don't have any goddamn clues about where the smart money managers will show up and buy. So it's going to be a complex and very tricky area to navigate for experienced traders. I'll try to handle this, like we stated, behind closed door, because I certainly don't want to invite you guys into buying too quick. And anyway, the lesson will be plain and simple. Any buying activity into the stagnant range boundary areas and context must be done with half the money you expect to invest in the current context, because you certainly can't jump in all in just because you want and think that prices are way more attractive. Sure thing they are. We've lost quite some grounds and there are definitely currently interesting prices available. But if you get in, and let me be real honest, I already bought some things earlier today. I intend, and I did it with approximately 40% of the cash I have. So I mean I'm still 60% liquid, and I'm still keeping that cash for opportunity at much lower valuations, including chaotic structure as well. I think supports might be showing in the nearby areas near the 23% Fibonacci cluster or down to the 38, but still that also means we could just fuck it all up and just destroy everything. In that perspective, having some spare cash is essential. So don't spend it all, and spend it smartly if you intend to buy in. If you are one of those guys I just mentioned who have some available money and absolutely no cryptos in your portfolio and just want to get in on intermediate trend maturities, in that perspective, try to reach out to someone experienced in the Discord, the Orange guys, and ask for assistance. They know how to handle second range boundary and they will be able to assist you into this process. But please don't do it unless you are fitted for what we just stated. You have some cash you wanted to invest and you've patiently waited for the pullback, which was the plan for you guys for multiple months now. So here's your opportunity to start getting in, and you as well, 50% in, no more. Keep some cash because we lack of visibility at that point. All right. Otherwise, second range boundary, if you're not experienced enough, just be patient enough to wait for the third one. The third one will give us the information we need on what the structure, the likeliest option for structuring this range will be, and then we'll adapt. We'll eventually figure out if we're going to buy the fourth range boundary or buy a bullish breakout or just let it mature, and so on. Okay? It is not the century's opportunity that's just happening right now. It's really more like we've sent the message I've clearly stated for the 1st of fucking January. We're going to range and it's going to be boring, painful, stupid, and long. So it is not going to V-shape reverse. Don't really and don't even think about it. It's definitely going to be complicated. All right? So behind closed doors or assisted with experienced traders, otherwise patience, and please don't try to catch the dip. It's not going to work out that way. Bye guys.